Hi, my name is Karen Gaines, your nonprofit finance guide, and today we are going to talk about how you can tell if your financial statements are correct. Sometimes I hear individuals say, I'm not sure if my financial statements are correct, but they don't know what to do in order to figure out if they are correct or not. They don't want to hire an auditor because that would take too much time and would be way too expensive for them. And besides, you want to know if the financial statements are correct now. So I will show you how to figure that out. In order to do this, you may need the help of your bookkeeper or accountant. The first thing you want to do is run or obtain your most recent statement of financial position, which many call the balance sheet. When you look at it, you will see a list of accounts with balances. Each of those accounts should reconcile to something or have some type of explanation. So here's an example of a statement of position. Okay, so we have our statement of financial position for ABC Nonprofit. This is a fictional statement of financial position. So the first thing you want to do is make sure your assets equal your liabilities plus your net assets. That's the formula for an accurate balance sheet. So your assets, 63,500, should equal the total liabilities in net assets. A lot of accounting software will not allow you to enter incorrect transactions. So if you're using an accounting software, it's highly likely that this formula works. Again, since the software will not let you enter an incorrect entry. So let's start with the assets. Let's start with cash and investments. So these are two bank accounts. These two amounts should tie to a bank reconciliation and or the bank statement. Okay? If they don't tie out to those documents, something is wrong and it needs to be investigated. Accounts receivable. In your accounting software, you should be able to run an accounts receivable report. That report will list out for you everyone who owes you money by amount. And when you run that report, it should tie that total on the report should tie to the number on your statement of financial position. If it does not, that means a manual entry was probably entered in somewhere, and the number is highly likely inaccurate. Prepaids. Prepaids that typically exist when an organization prepays rent or prepays for a venue or event, things of that nature. Generally with prepaids, all you need is the receipt for the purchase and an explanation as to why it is in prepaid and when it will be moved out. Inventory account. If you have inventory, there should be a report you can run in your accounting software that will list the details of what is in inventory exactly. Or, you may have some entries in your accounting software. Like if you're a very simple, straightforward type of organization, it may just be an Excel sheet of what was purchased and when, and inventory may get moved in or out, every 2 or 3 months. It's like very, very low activity. But again, there should be some type of reconciliation, detail to tie out that inventory account. Let's go to liabilities, accounts payable. Just like accounts receivable, you should be able to go into your accounting software and run an accounts payable report. And that will give you a list of all of your vendors and everyone you owe money to. That report that's ran out of the accounting software should tie back to the total on your statement of financial position. If it does not, someone has made a manual entry and that balance is likely incorrect. Bank loan, you should have some type of bank statement and reconciliation, but the bank statement should be reflective of the balance shown here on your statement of financial position. Now let's move on to your net assets. So in your net assets, you'll have unrestricted funds and restricted funds. So unrestricted funds are funds that you receive when funds that you receive, and you can do anything you want with these funds. You can spend it on operations or capital or anything that is for your organization. Restricted funds are funds that you must spend on a particular purpose. So restricted funds could be, hey, you can only use these funds to, pay your W-2 employees, and that's it. So with your restricted funds, that should reconcile to maybe an Excel spreadsheet. It should reconcile to something where it gives a list of restricted funds, the amount that is restricted, and then an explanation as to how those funds are to be used. Okay. Now the next thing you're going to want it to do is go to your statement of activities, which is also referred to as the profit and loss statement. Review the statement of activities over several months and look at any trends. So let's pull up the statement of activities. Okay, and this is just a fictitious one. Again, I just found on the internet. I'm just using it for just as an example. But you can see, this profit and loss statement goes over several months. Okay, when you're looking at your profit and loss statement or statement of activities, you want to pull up, ideally the last 12 months. And you want to look for trends. You want to look for any fluctuations. You want to look for something that looks odd. So if you are looking at an account and all of a sudden you see like this huge spike and you don't understand why that's there, you need to investigate it. Or if you see an amount in an account where you never where you've never spent money on that category, then you need to look into it. For example, you may have an amount for motor vehicles, and you're like, well, I've never purchased motor vehicles before. So you're going to want to look into those type of things. This may take some time. This may take some time because you may look at some amounts and, if you've never done this before and you're looking at your account and the amounts, you may see a lot of amounts that don't make sense to you, in which therefore your bookkeeper or accountant will need to look up and provide explanation. Okay? So the third thing you are going to want to do is compare your statement of activities to your budget. So let's pull up the budget. Okay, and again, this is a fictitious profit and loss statement. I just pulled off the internet, but the point is, you'll have your budget and then you'll have your actual. And if there are large variances between your budget and your actual, you need to look into it and you need to understand why you have that variance. So, you can look at this. No, that's not, I don't want to use that example. You can look at insurance, okay? You budgeted $7,400 for insurance and your actual is $5,000. And you're spending, less than what you expected, which is okay, which is good. But you want to understand, like, well, what happened? Like, why is that? Do we have the wrong coverage? Or did we miss some payments? Same goes with landscaping and snow removal. Your actual is $2,000, but you only budgeted $24. You need to understand why is there such an overage for landscaping and snow removal. We didn't plan on that. Going through all these exercises and doing all of this will also help you identify any areas of fraud. You'll be able to see if there are fraudulent transactions. Okay, so when you do those 3 exercises, you should be able to tell if your financial statements are accurate or not. Okay, so hopefully that helped you. Thank you for watching and have a great day.